Bitcoin price by the end of the year?
For 2025, I think it's safe to assume that Bitcoin's trading over.
Will Sol flip ETH by market cap?
I mean, obviously the answer is
what sort of regulations can be implemented in order to better police this space that does give certain protections to people? How do you find a way out of this massive PvP aggressive extraction event that we're seeing right now?
Yeah, that's the $1 trillion question. The Melee token the evidence just seems damning. I'm not a lawyer, but my God, like this is crazy. I mean, it was like having like PTSD flashbacks from that.
GM, one and all, and welcome to another interview here on Coin Bureau. And today we are being joined by Joe McCann. He is the founder and CEO of Asymmetric Ventures, a very well-known crypto fund. So Joe, welcome to the Coin Bureau.
Thanks for having me.
Great. So before we begin, guys, obviously nothing in this interview is financial or investment advice. So please consult the disclaimer in the description below for further information. So, Joe, just to quickly introduce you to our audience, can you just let us know a bit more about yourself, your background, and Asymmetric Ventures?
Yeah, sure. So I've been a technologist and a trader for about 25 years now, flip-flopping my career between places like Wall Street and the kind of Silicon Valleys of the world. And I started Asymmetric in early 2022, and it was because recently in 2021, I had a friend of mine who's a very successful VC basically tell me like, hey, Joe, you're the only guy I know in crypto that really understands the tech as a software developer, but also knows how to trade. And you're not running or you're working at a crypto fund. Like, come run a fund at this VC firm called Kindred Ventures. And I was like, man, I'm flattered, but I'm an entrepreneur. So if I'm gonna do something, I'm gonna do it myself. And he was like, I knew you were gonna say that. And I was like, what do you mean? He's like, you should run your own fund. Let me help you kind of spin it up. We can talk about a structure and I can introduce you to some people. And oh, by the way, I already pitched you to Mark Andreesen and Chris Dixon and they want to be the first money in. And I was like, how do you pass that up? Right. So, Asymmetric was born kind of, January 2022. We launched in June 2022. We actually have 2 hedge funds and now our 3rd VC fund that we just announced that we're raising capital for now. Early stage blockchain, Web3, pretty agnostic for Venture Fund 1. And then Bitcoin OG Dan Held joined the firm last year, and we've launched the Asymmetric Bitcoin DeFi Venture Fund. So this is a venture fund exclusively focused on, BitFi, layer 2s, meta protocols, et cetera. And then our latest VC Fund 2, is the first crypto fund to exclusively invest in consumer apps for Web3. My view is really that infrastructure is pretty good and infrastructure is heavily overinvested at this point. And it's probably time that we start to see some breakout applications. So we're looking at backing founders that are building interesting applications and use case on top of the underlying blockchain infrastructure that we have today.
You got it. So you also invest in liquid assets then out there as well, like not just early stage stuff and early stage projects. It's also liquid on the market right now.
Yeah. So on the hedge fund side, right, like the distinction between the two funds, venture funds, you're investing in startups. Hedge fund, you're basically trading liquid assets. So on the hedge fund side, we trade basically anything that moves, but we have a concentration risk policy. We have various risk management policies in place that we adhere to. And that's, frankly, I think smart and utterly reasonable in a place like crypto. I've been doing this a long time and we've had really good success to the extent that like in 2023, we found out from Preqin, which is a data aggregator kind of service that determines and tracks hedge fund performance around the world. We were number 1 for 2023, and it had a lot to do with our risk management policies. And that number 1 ranking wasn't just for crypto, it was for all asset classes. And that's because we trade, a lot of derivatives like options, but also, I was the first fund manager to invest in Memecoins in October of 2023. So we kind of have a pulse on not just the tech and not just the financial side, but also culture and how that actually matters in crypto. But we have a sophisticated options and derivatives book that we end up trading, pretty frequently. And, last year, again, we were up triple digits. So back-to-back years of triple digit performance out of the hedge funds.
You got it. Yeah. I mean, your Memecoin Picks, 2023, I believe Bonk was one of the biggest contributors to performance in that year, right?
That's right. Yeah. I mean, I kind of put together a hypothesis as to why I thought not only would Solana break out, but also Bonk, because it's the dog coin on Solana and it was trading at like a $28 million market cap. And the rest is history. It ran up to like $2 billion in a couple of months. That was a huge performance driver for us. But more importantly, at the firm, we have what's called a concentration risk policy, where any token that's not in the top 20 by market cap, we never spend more than 2% of the fund's asset under management. Because, if you're wrong and it goes to zero or it goes much lower, it doesn't blow you up. But if you're right, then there's an outsized performance. And so Bonk was definitely a major contributor to that. But we also had, a lot of liquid exposure to Solana as well as Bitcoin, and still do to this day.
Cool. So then moving on to obviously the big, what you just mentioned there, Bitcoin right now. And I'm curious to get your take on what's going on right now, because obviously there was a lot of euphoria and excitement out of the Trump election, and then going into the year, new all-time highs again and again. And over the past month, there's just been a lot of sideways action. So I'm curious to get your take on what's Bitcoin's next move.
Yeah, I wrote about this in our market updates, which are free to read, read.asymmetric.financial. In our, I think first week of January, put this one out. And I basically said the easy money is over, right? 2024 was easy money. You had ETF flows, you had an election. And I was just like, it's going to be a little bit less simple than just buying and holding. If you're a hodler, you're not trading anyway. It doesn't really matter. But this year, I think you have this confluence of events that are somewhat countervailing, where on the one hand, you have arguably the most pro-crypto administration in US history. It's not even close. In fact, I don't think we could dream of the number of headlines that we keep receiving that are positive. In addition to that, you see the proliferation of ETFs. So whether this is going to be a Bonk ETF, a Doge ETF, a Ripple ETF, a Solana ETF, there's so many kind of tailwinds that are backing the market. However, on the flip side, as you've mentioned, the past, call it month-ish or so, basically since I would say Trump launched his Memecoin on Solana, you've seen kind of sideways to lower action, particularly as it relates to Bitcoin. This is a flows story for me. There's a couple of things in the market structure that I look at to determine, are we consolidating or are we trending? And one of the most, kind of key indicators that I look at, well, there's two of them. One is what's called the Coinbase premium. So this is the spot value of Coinbase Bitcoin versus Binance. And when it's positive, you typically have a rise in price because there's typically US institutional demand for Bitcoin. US institutions pretty much only trade in custody on Coinbase because they're the only regulated venue for the most part that they can actually buy from. And all the ETF issuers, mostly, I think almost all of them custody with Coinbase. So that's one aspect. The Coinbase premium, I think it's a pretty solid indicator. But more importantly, the CME has Bitcoin futures. And now that the spot ETFs are out there, what a lot of hedge funds ends up doing is they end up going long the underlying ETF and they short the future to capture what's called the basis trade. When that basis trade annualizes at 10% or more, you see a lot of open interest open up in the CME futures, as well as a lot of flow come into the Bitcoin ETFs. Right now, it's trading at about 8% annualized. That isn't as juicy of a trade to TradFi hedge funds to put on. So one of the things that I also look for is, when are we starting to see, that basis trade eclipse 10%? And do I see the open interest in CME volumes and CME volumes start to tick up? And if so, we may be lining up for another leg up in Bitcoin. Finally, we're consolidating under a psychological level of $100,000. That's a pretty big psychological level, just like 10,000 was a big psychological level, just like 1,000 was a big psychological level. And so as you continue to consolidate under that level of resistance, at some point, assuming we actually break, higher, you'll end up with something like what happened in November, where you had effectively 2 months of, pretty much up and to the right price action. Do I know when that's going to happen? Of course not. But we're positioned for that, because I think on the one hand, you look at the broader macroeconomic indicators. Global liquidity has not topped, but interest rates have topped. The dollar is actually weakening. There's a bunch of tailwinds on the macro side that are suggestive of higher prices in Bitcoin. And you're seeing gold hit new all-time highs seemingly every day. It looks like it's approaching 3,000 any day now. Bitcoin tends to follow suit with that. And then on the other hand, again, you've got one of the most pro crypto administration in U.S. history. And, crypto is a global sport, so to speak, but the United States drives a lot of decision making and influence around the world as it relates to policy and regulations. And I think that given the rhetoric that's come out of the administration, as well as the actual council and people that he's appointed to key positions being pro crypto, it's no surprise that you see sovereign wealth funds like Mubadala out of the UAE becoming the 7th largest holder of IBIT with $500 million worth of Bitcoin ETF. Other countries understand where I think that this is going, and so it's very difficult for me to see an outcome where Bitcoin isn't at some point this year new all-time highs. The question is really when.
Makes sense. So we'll get onto all of those factors in a bit. I just want to zone in on one of the points you made around the basis that's earned, the cash and carry trade on the spot futures, on the spot ETFs, and then the futures. Because was that the narrative was a lot of the AUM flowing into the ETFs towards the end of last year was because of this trade. How much of it was, do you think, in terms of percentage terms, was this trade, hedge funds putting on this trade versus pure directional people getting exposure to Bitcoin on the fund or retail side through the ETFs?
Yeah, that's the $1 trillion question, right? We don't have any look-through attribution on where these ETFs are being, placed or held. And furthermore, the archaic system that TradFi has in the US, where they're called 13F filings, they report those basically 6 weeks after the last quarter ended, right? So you could see, for example, that Goldman Sachs in Q4, Goldman Sachs, the bank, had, I think, a couple $1 billion worth of Bitcoin ETFs. But is that to high net worth, their kind of private wealth management group where people are holding them? Or are they more towards the prime brokerage business where hedge funds are trading them? We simply don't know. This is one of the reasons why I try to use the open interest that is on the CME as a proxy. For example, yesterday, I guess Tuesday, February 18th, we saw Bitcoin kind of pull back down below that 90 or below 94K down in the 93K area. And CME open interest was dropping like a stone, right? So that to me implies when the Bitcoin ETF is selling off and open interest is unwinding on the CME, those basis trades are coming off. There's really no way to see, again, from 13F filings or otherwise, whether these are actual, holders of these ETFs or if they're actually doing the basis trade. So you have to infer it. It's kind of like, in crypto, we see a lot of these liquidation charts and heat maps. And the thing that I always remind people of is that these are just inferred. You actually don't know explicitly if these are areas where there's going to be like heavy liquidations because of too much leverage. It's just an inference. And it's the same concept for something like how much of this is the cash and carry trade versus people that are just actually directionally long the ETF.
But anecdotally, from speaking with people in TradFi circles, is this a very popular trade? Has it been a popular trade over the past few months?
Well, up until probably like the inauguration, yes.
Yeah. Okay.
And the reason is like in crypto, we hear 100x, 1000x, 10x all the time, right? In TradFi, earning 10% annualized on something is huge, right? It's an enormous, amount of P&L, and it has a lot to do with it's really difficult to actually outperform some of the key benchmarks, but as well, these funds in TradFi are just orders of magnitude larger than most crypto funds, right? So we have 9 figures of AUM at Asymmetric, which is a non-trivial number in crypto. It's a drop in the bucket in TradFi, right? So, but if you're a TradFi fund and you've got $10 billion under management and multiple portfolio managers, and each one of them manages some, part of the book, if they can clip 10% annualized on something, they're going to go for it. They're not going to put their entire portfolio in it, but they're going to have an allocation to that in most cases. So it's really tough to say, how many people are putting on this trade because you're getting information after the fact. And the irony of all of this is that 13F filings are just an archaic vestige of TradFi, when in reality, wouldn't it be nice to use a publicly transparent distributed database or ledger to see in real time what people are doing? I mean, it's just the irony is too thick.
Yeah, 100%. Okay, so let's zoom out a bit. Obviously, you talked a bit about the macro landscape there, and you said it's looking slightly positive for Bitcoin. Now, one of the things obviously seems to be a large discussion right now about how many rate cuts we will see this year, if any, right? Obviously, there's been a lot of inflation scares to the upside more recently. And this has caused some people to think or consider maybe even some rate cuts towards the end of the year. I saw Bank of America said this a few weeks ago. Where do you stand on this?
Yeah, I mean, I've been kind of pounding the drum on this for quite some time. I think one of the most asymmetric trades right now is actually being long Fed funds futures in the market. On the hot CPI print from about a week or so ago, you saw basically one cut priced for 2025 all the way out in December. That to me just seems fundamentally mispriced. And, back last year in early July, I went on record and wrote about saying I think the Fed's going to end up cutting 50 bips in September. People thought I was crazy. They cut 50 bips in September, right?
Yeah.
And now, I still think that there's a path to, 4 cuts this year, 3 to 4 cuts this year. And there's a reason for that. There's multiple reasons for that. One, the trend of inflation is actually lower. You're going to have idiosyncratic spikes. If the trend is lower, it doesn't go down in a straight line. It kind of goes like this, right?
Yeah.
And so these kind of temporary spikes, although they're great headlines for hammering the market and people kind of, get all up in a tizzy about it on Twitter, the trend is clearly lower. If you look at the PPI report as well, which is the Producers Price Index, pretty much everything except for portfolio management, people like me, were negative, right? But the portfolio management piece was actually, pretty materially higher relative to kind of the other components in the PPI. That also suggests that, as you infer the PCE number, which we do get this week, that it's probably trending towards 2%. And again, that is the trend that we're in. We will see these kind of idiosyncratic moves up and down. However, let's assume we don't achieve the 2% target from the Fed. The Fed can actually let the economy run hot, inflation run hot at the expense of growth. Meaning, if they're more focused on growth, then there are scenarios where they could potentially let inflation run a little hotter than normal. There's no reason that they can't do this. Secondly, if you look at the reverse repo market right now, it's sub $100 billion for the first time in a very, very long time. It just started happening this year. When that happens, and assume that the reverse repo actually gets drained to zero, the Fed basically has to end QT, or they're going quantitative tightening, or they're going to have to do something else because there's not going to be anybody to buy all of this, to manage all the liquidity that they're pulling out of the market by letting fixed income products on their balance sheet actually kind of expire, if you will. The Fed has more tools at its disposal than just cutting rates. And I think that that's another thing that people are leaving out. Now, rate cuts do matter. It's a very simple thing for people to understand. They could drop the regulatory caps on the collateral ratios at the banks to enable them to, buy infinite treasuries, right? Like there's a lot of other tools in their toolkit that they can actually do. So I think that if you take what I just mentioned kind of mechanically and, sort of macroeconomically, and then factor in the Trump factor, right? This is a guy who's explicitly stating repeatedly he wants rates lower. Well, Jerome Powell is a political appointed position. And currently I don't have any knowledge of Trump saying he's going to fire him. But if those rates don't come down, I don't know. It seems like a tough position to be in, especially given that Powell has, I think rightfully so, cemented his legacy in managing through this, COVID and the inflation spike and bringing it down and not causing a recession. It would be a shame if he just got terminated because he wasn't following, the direction or the influence of the president of the United States. Put all this together and you say one cut in December this year seems like a mispriced trade.
Got it. Okay, well, that's on the short end. And you mentioned Trump there, and that's interesting because it raises up the question of the long end. And I don't know if you've seen all these, the reporting that apparently, Scott Bessent at Trump's direction they've been trying to focus on the 10-year, right, and the 10-year yield, especially. And as we've seen more recently, we've seen a bit of a bull flattening where the 10-year falling faster than the short ends. So I'm curious, do you think that, this Trump trying to bring down the 10-year, do you think that's going to happen? Do you think that's a wise strategy from a macro perspective? And what do you think that means for risk assets?
Yeah, I do. I mean, so first, if we saw the Treasury auction earlier this week, they actually issued fewer T-bills than what were expected. So you're kind of seeing a slow reversal of what Janet Yellen did, which was stuff the market with bills and kind of kick the can down the road. Scott Bessent is very talented, very intelligent, understands global macro, but also understands foreign exchange really well. And so I do think that for them focusing on the 10-year to bring that down, that approach suggests to the broader market that, look, we're not necessarily super concerned with the long end of the curve, right? Because that thing was getting kind of blown out in Q4. We're not super concerned with the front end of the curve because we're going to be issuing fewer T-bills and not necessarily kicking the can down the road. But I think the fiscal dominance piece relative to, say, the interest rate policy of the Fed has been driving a lot of the broader global macro setup. So what is Bessent going to do? Well, what we've signaled thus far, or what we've seen signaled thus far, is he's less concerned about these tariffs. And why is that the case? Because they want to be able to fund $4.5 trillion in tax cuts, right? So a lot of people are missing the other half of this tariff debate. And those tariffs, Trump is a businessman, negotiator. If you know anything about negotiation, you start way out and then you pull back. Yeah. And that's likely what's going to be the case with a lot of these tariffs. So as, folks kind of have this panic, if you will, around the inflationary spike related to tariffs, there's going to be a huge tax cut that's going to be coming. At least that's what the Trump administration has put forth to potentially offset that. I think the other thing to note is as tariffs in the last trade war under the Trump administration, you actually had gross receipts for the U.S. government increase dramatically without causing a spike in inflation. And so I think there's precedence here to suggest that, hey, the media and folks on Twitter getting, all up in arms and concerned, like, hey, inflation's already high, even though it's trending lower. These tariffs are going to be massively inflationary, are just denying what has happened historically. And so as the government has additional tax receipts from these tariffs that can fund these potential tax rates, I don't see, some sort of inverting of the curve even further where people are panicking. Finally, the stock market has actually done extremely well the past couple of years, back-to-back 20% plus gains of the S&P 500. There may be a case to be made that it's time to buy bonds, right? So you may actually just see a bid in the market for, say, the 10-year to clip that coupon while potentially hedging against not having a third year of the S&P at 20% plus.
Right. So speaking of Trump, then obviously, like we said earlier, massively pro-crypto, election, and there's many regulatory changes coming, especially for crypto. But let's start with the most important, and one of his initial promises on the election victory would be a Bitcoin strategic reserve. Now, I don't know if you've been tracking the odds on Polymarket and also the commentary around it, but it seems that this is becoming increasingly less likely, or the wording has changed a lot, or is it going to include other cryptos? So I'm keen to see where you stand in terms of the potential outlook for this strategic reserve of some form.
Yeah, I mean, I've been kind of tracking this since he was running for president. And then when Senator Loomis kind of put forth the architecture for this type of a bill, I think that currently the Polymarket is mispriced. The challenge is if it mirrors things like the Strategic Oil Reserve and the Strategic Gold Reserve, then it's an act of Congress that has to get passed, et cetera, et cetera. And that obviously could be a challenge because this is Washington, D.C., where basically nothing gets done, right? However, the second presidency of Trump, the first presidency, I think, like candidly, I think he was surprised that he won the presidency. And you kind of saw like a kind of a, oh man, I've got to get some really smart minds in my cabinet and in my orbit to help me kind of, run this government. I would say that the talent level is an order of magnitude higher this time, right? If you see the people that are involved from, obviously folks like Elon Musk to David Sachs to Mark Andreessen, who's an advisor to David Sachs, to just the people that are now, you have Paul Atkins at the SEC, Bessent at the Treasury, folks that are now joining the OCC, the FDIC. These are all very pro-innovative, and I would argue pro-crypto candidates. And so if you have, let's just call it the financial arm of the US government in a pro-crypto mindset, and you have Trump talking about this strategic stockpile, and you have Trump creating a crypto council of sorts, even if it's official or unofficial, it doesn't matter. I put all that together and try to weigh the probabilities of outcomes here. And you say, thus far, Trump has been pretty spot on with meeting the promises of what he said on his campaign trail. Whether you like his politics or not, it's just a fact. Whether it's the immigration policy to things like, freeing Ross Ulbricht and pushing forward a pro-crypto and pro-AI innovation agenda. So how does it get done? Well, remember, I mentioned it requires an act of Congress for it to mirror what has happened with things like oil and gold. Not impossible, lower probability. You may have noticed recently that he talked about launching a sovereign wealth fund for the United States, right? Well, what could a sovereign wealth fund invest in?
Yeah, exactly.
Probably Bitcoin and anything else that they want. And furthermore, let's be clear, this is Donald Trump. Do you think he's going to have like the second or third or fourth largest sovereign wealth fund in the world? No, he's going to have the biggest sovereign wealth fund in the world. It's
Yeah.
Donald Trump, right?
Yeah.
So even if the sovereign wealth fund isn't the vehicle to start accumulating Bitcoin on behalf of the federal government, the fact that it is a new, fresh idea for how to invest and allocate capital out of the United States suggests that there may be another alternative coming for how they could actually do the strategic Bitcoin reserve. So this is going to take some time. I do think that, he talked about on the campaign trail, the first 100 days, they're going to have X, Y, and Z done. We're about like, not even 30 days, I guess 30 days in as it stands today in his presidency. So there's still another, 70 days or so to go to hit that 100-day mark. I do think that there's a higher probability that it gets done. The mechanics of it are really the TBD. The will is there. The track record of him, making clear on his promises or making good on his promises from the campaign trail are there. He has a massive constituency now of people that are pro crypto that want this to happen, right? Let alone having folks like Senator Loomis actively working on this pretty much every single day. So the long answer longer is like, I think the market is currently mispricing this. It's just really how does it functionally get done within the federal government?
Yeah. So where there's a will, there's a way. On the balance of probabilities, we'll see some form of it in some way.
Yep.
Moving on a bit down the crypto risk curve out of Bitcoin land into altcoins. Of course, this is what the big topic of the day right now, obviously, is what's going on in the hell with meme coins right now. Obviously, you are one of the biggest proponents of meme coins. Have been following your trajectory in terms of your outspoken praise of meme coins, specifically last year when it came to the celeb meme coins, and then also with Trump's meme coin launch and all that. But that's now meme coins have obviously culminated into what we've seen more recently with the Melania launch, which basically many can argue was quite extractive, and then also recently this Libra launch, right, which just happened a few days ago. Now, I'm really curious to get your take on what's happening now and whether this has at all changed your thesis about meme coins and the meme coin sector.
Sure. So, I'll probably say something unpopular, no surprise. The term extractive, to me, I understand why that term is utilized and why it picks up so much engagement on Twitter and other venues for discussion around meme coins and just crypto in general. The reality is no one put a gun to anyone's head and told you to buy a meme coin. And I think one of the promises of decentralized finance, Bitcoin, crypto in general, is that certainly in the United States, and I'm an American, so I'm going to speak from that perspective, Bitcoin was created largely as a reaction to the socialized losses that the banks received during the global financial crisis. That is the government, or in some cases, the nanny state, dictating what will happen with your money. Now, whatever, 16 years later, we have permissionless networks, self-sovereignty. You can, something the government cannot control, they cannot take away, they cannot, in theory, manipulate or affect. If they manipulate or affect the price of Bitcoin, it's because they're buying it, right? Yeah. So I understand, people buying something and losing money on it and being upset and looking for the scapegoat and to say, oh, well, this was extractive, this was a scam, this is what. I understand that. I empathize with that. No one put a gun to your head and told you to buy that, right? And so the irony is that we went from we don't want the nanny state, we don't want the government controlling our assets to I control my assets and now I don't want to be held accountable for the mistake that I made, right? I'm not suggesting that investing or trading meme coins is not going to be affected by scams and fraudulent activity. But so is TradFi, right? Like the largest investment banks in the world, pretty much every year get fined for money laundering for terrorists and drug cartels. The Madoff scandal, right? This was a guy in a suit running a fund, the SEC gave him a clean bill of health 1 year before his implosion, right? So part of this is like, philosophically, I feel that if you're going to play with fire, you might get burned, right? If you're chasing the next 10, 100,000x coin, it may not work out for you, right? Again, I'm not suggesting that what occurred with, say, the Melania or Milei token was okay. I think there's pretty strong evidence that there was some nefarious activity. And that's unfortunate because it does affect the number of people involved with it. But I do think that we have to kind of really level set here and say, if you're going to invest in anything, forget crypto, you are at risk of loss of principal. That is investing, period. You're putting risk to work. So I don't want to necessarily say that this is meme coins are the most fraudulent, scammy part of crypto. We've had scammy ICOs, we've had scammy NFTs, we've had BitConnect and SafeMoon, all these kind of scams that have been around in crypto for a while. This is just another avenue for nefarious actors to utilize and try to scam and fraudulently extract money from people in a nefarious way. And it's unfortunate, but guess what? It is the permissionless network that we have created with cryptocurrency and blockchain technology. And so I think that, the variance between good and bad on permissionless networks is going to continue to widen as more and more adoption of cryptocurrency occurs. You're going to have super positive outcomes, like people that may be debanked, people that live in countries where they immediately wake up and their currency is devalued 50%, that want to have access to US dollars or Bitcoin or whatever. There's huge benefits to that. You're also going to end up with people that are going to manipulate and scam because it's also permissionless and people can be kind of targeted as easy marks for, fraud or otherwise. How does that change my kind of view on meme coins? It doesn't. And the reason is because that variance is going to persist in crypto forever. That's not going to change. People's incentives, whether they're good or bad incentives, drive their decision making, irrespective of whether it's a bank, it's a hedge fund, or it's a cryptocurrency. And so the biggest takeaway for me with sort of the Trump meme coin launch, which I think was clearly missed in mainstream media. I talked to a bunch of journalists reached out to me, and all of them were just trying to focus on the grift. This is a grift, right? Mm-hmm. And I'm like, wait a second. You have a US citizen issuing a token and is an investor in it, who happens to be the president of the United States. Does anyone see how big of a 180 this is as it relates to the kind of regulatory environment in crypto in the United States? That's what was missed. And so are we going to have some short-term pain and events like the Milei and Melania tokens? Yes, that is part of the variance that I talk about in these permissionless networks. But longer term, we now have a clearer path for how these things are going to be labeled, categorized, whether they're securities, commodities, collectibles, whatever it actually is, because the sitting president of the United States issued his own meme coin. So to me, it's strengthening the meme coin thesis because now it's given agency to any brand, any company, any individual to do whatever they want. There will absolutely be scammers involved in this, just like any other part of history where people can make money quickly at the expense of others.
Yeah. So there's a few things there that you've gone over. I intend to give from the perspective of the philosophical slant that at a permissionless network, there can be fraud, and fraudsters will use a permissionless network to do what they want and extract. And there have been situations of this in the past in the crypto space, in the ICOs and in many of these other examples, NFTs as well. And yes, some TradFi institutions have been implicated in doing similar things. But I think the main reason people are taking issue with the current state of the meme coin space is because how brazen it has become, normalized to the extent that the Libra or Melania were just specifically designed from the get-go with insiders, snipers for mass extraction and and fraudulent to the extent that it in traditional markets would be completely illegal. and the fact that people on the timeline are seemingly unaware of the fact that all of this is illegal and should be, and it's insider information, all this kind of stuff. So I think that, and this gets to a question, I think, like, should meme coins exist? Do they have a right to exist? Yes. But what sort of regulations, if we are going to have presidents issuing meme coins, if you are going to have this kind of state of the industry, what sort of regulations can be implemented in order to better police this space that does give certain protections to people who may not be the sophisticated investors, who don't exactly know what they're getting involved in? I guess it's like, how do you find a way out of this, massive, PvP aggressive extraction event that we're seeing right now?
Yeah, I mean, it's a great question. And I am definitely not a lawyer or a policy implementer or suggester. But the way that I kind of look at it is, there's no doubt that the intent, and this is what I was talking about, kind of like the incentives or the intentions of people that are launching these kind of fraudulent or scammy coins. The intent was to scam, right? The intent was to extract. That's a problem. But I don't think you can change human behavior by regulation. And the reason I say that is there have been laws and regulations put in place in TradFi for decades, and people still do it, right? It's the human aspect that's driving a lot of this decision making. Now, you can have clear sort of insider trading laws or regulations. You can have clear definitions of what is a security versus a commodity versus a collectible, and then what do each of those mean. Enforcing that is going to be challenging in the current environment because they don't exist, right? And so I don't think zero regulation makes sense. And in fact, like, we've been asking for what are the rules for years now, and I think we're on a path to getting those. And that should potentially defer some of this nefarious activity. But right now, there's a case to me, like, where do you even sue somebody for the Melee token? Like, Argentina, the United States, someplace else? Like, who has regulatory oversight of it is an open question. And this is, I think, one of the reasons why the brazen activity, which is also completely insane to me, is proliferating, because people are like, what do I have to lose? Like, if I can make $100 million and then I get like sued and I get slapped on the wrist, or I pay some fine or whatever, so be it. The human intention is the issue here, because the incentives currently are aligned with being able to run rampant fraud across these types of meme coin launches. Conversely, there are a lot of meme coins that aren't fraudulent, right? It just clearly, the Melee token was, I mean, the evidence just seems damning. I'm not a lawyer, but my God. And the kind of conversations that Hayden was having on the internet, I was just like, I don't even think he has a lawyer at this point. Like, this is crazy.
He's running the SBF playbook 101.
Exactly. I mean, it was like having like PTSD flashbacks from that, right? So look, what would be some regulations? I mean, I would zoom out a bit and go, it's less about meme coin specifically and more about what is an appropriate, and again, this is from a US perspective, what does the market structure look like? What are commodities? What are securities? What are collectibles? Do they need to be registered? Do they need to be, filed? Can a US-based company actually do these types of things? Does it still have to be offshore? If it is offshore, then, is it still under the regulatory guidance of, say, the CFTC, the SEC? Having any sort of clarity around this, I think, will hopefully deter some of this nefarious activity. But again, you're not going to stop someone if they have the intent to cause harm financially to people, irrespective of the venue for that. So one of the things that would be interesting would be, there's a lot of talk of fair launch protocols and what is the best way of actually doing this. And like, up until the Melee token and this being launched on Meteora, et cetera, like, Twitter hated Pump.Fun. They said Pump.Fun is extractive. And it's like, Pump.Fun designed their product to try to be as fair as possible. And Pump.Fun struck gold, and God bless them. Like, they're a startup, guys. Like, they're not a not-for-profit business where they're actually trying to make money, and they've done an amazing job at that. Now, all of a sudden, it's ironic that the sentiment shifts from kind of hating on Pump.Fun to hating on Meteora because of this Melee token launch and the potential kind of insider activity that could be associated with it. When people are down bad in crypto, they immediately look for a scapegoat. I've seen so much propaganda that is like utterly doctored and fake all over the internet over the past, week or so. That's just categorically false. But when you have these pseudonymous accounts that are posting it, their whole business model is engagement. And so that's not going to slow down. So it's kind of like the eye of Sauron is just moving to like whatever the next target is when the markets are down or they're sideways. I can assure you that if the Melee token was up for 2 or 3 days and then started to go down, none of this would be an issue because that's effectively what we saw with Trump.
It's a fair point. So coming back to the impacts of this now, obviously, and the discussion right now, obviously, is people are taking, it's impacting on Solana to the extent that obviously Sol has given up a lot of the rally, the gains it's seen since the Trump launch, and then also its gains versus ETH since Trump was elected. And obviously, there's a lot of FUD about the Solana ecosystem right now. And you obviously are well known to be a very big Solana bull. So do you think this weakness is short-lived? And what's your, has it changed your thesis at all? And what do you think you see going forward for the Solana ecosystem?
I mean, so I just look at the data, right? I take the noise of the narrative out of it. A lot of people are trying to associate Solana's drawdown in price with the Melee token and how kind of that negative cloud is hanging over the Solana ecosystem. Unfortunately, that falls flat in the face of data. So Solana has actually been in a downtrend since Trump launched his meme coin when Solana hit a new all-time high of $295. Why is that the case? Well, we know that there is a large unlock coming on March 1st. And those are locked tokens that were purchased by institutional investors last year during the FTX estate sale for these Solana tokens. Now, those were purchased roughly in the range of like $62 to $110, depending on when the investor bought into it. If you look at the funding rates of Bitcoin, Ethereum, and Solana over the past, couple of weeks, you'll notice something very different about Solana versus Bitcoin and Ethereum. Bitcoin is basically flat to slightly positive funding rate on the perpetual contract. Ethereum is flat to slightly positive on the funding rate. And you've had these idiosyncratic moves down when the price puked. Solana has been negative. So why is the funding rate negative? Because you have a lot of people hedging those locked tokens. So if you're long the spot token from $100 and you can short it at $200, that's 100 points of effectively free money. You obviously got to subtract the funding rate from the perpetual contract. But that's what this weakness is. You're having a lot of people hedge into, and a lot of them are already hedged, by the way, but a lot of them are hedging into this unlock event. And by doing that, they have to short the perp. And that's what you're seeing in the market, right? The price keeps pulling down and the funding rate continues to go negative. So I've been saying this for months now. I mean, people ask me, I think every day, Joe, what do you think of the token unlock? And I'm like, it's hedged. The majority of this is hedged because if an institutional investor buys, $50 million worth of Solana and can hedge it and make $50 million in profit, they don't care about the direction of the trade. They care about making the $50 million of pure profit, right? Minus, of course, the funding rate. And so, my view is, and look, I've been wrong before, but my view is this is a non-event for the most part. You're already seeing the price get, hammered because of the hedging that's taking place. And so when the unlock event happens, let's assume people sell their spot tokens. They're going to have to cover their short. That is a neutral impact to the market. And so if all of a sudden the FUD around this unlock event turns out to be nothing, what do you think happens to the price? There's no sellers left. The sellers thus far have been people hedging. If they unwind those hedges, what's the direction of Solana? It's likely up again.
Yeah, I recall this happening last year as well around the Celestia unlocks when tier funding rates. Curious then as well, I mean, do you think that also there's a component of people going into the unlocks that are selling spot because they're worried about the unlocks, or is that a smaller component?
Oh, for sure. I mean, the retail side of trading in crypto, so let's call them crypto natives, there's no doubt people are likely selling spot, maybe even shorting the perp as well from just a directional trade because they think the price is going lower into the unlock. However, we're, a few months out max from a Solana spot ETF being approved, multiple of them. I don't foresee a scenario where it doesn't get it approved under this administration. It just seems highly unlikely. I mean, you've got Doge ETFs, Bonk ETFs, Ripple ETFs, even a Trump ETF. Yeah. So there's potentially massive institutional tailwinds that are going to likely accelerate the price increase of Solana. In the short term, the spot selling is largely retail investors. And it's likely because the direction of Solana has been almost straight down since the launch of the Trump meme coin. I just don't see this being a massive potential impact because the majority of the institutional buyers, again, are hedging that. And some of them, I actually know a guy, a fairly wealthy guy who put on a significant size of that locked Solana token that's completely unhedged. He's like, yeah, I'm just going to be long this thing. And so I do think that there's obviously risk to an unlock, but I don't see it as big as the internet is making it right now. And also because sentiment is so negative, it tends to pile on and compound. It's likely that you have some retail selling ahead of that, but the institutions and the institutional tailwinds that are coming with things like the ETF, it just seems like to me this is just a potential buying opportunity, especially as Solana has kind of traded back down to the bottom of the range in this kind of like 165 area.
Okay, man. So just quickly, in terms of moving on to any other alt L1s that you're interested in, or other L1s, because we've obviously got a massive proliferation right now, and some may say there's a saturation. But are you invested in bullish on any other L1s?
Yeah, I mean, part of the reason that I have been a Solana bull since 2019 is, as I look at the technology side of it, technical implementation of the network, it just seemed kind of obvious to me that parallel execution is probably the way that this is going to scale, right? And you see a lot of these other chains are effectively following that approach, whether it's Sui, Aptos, Sei, et cetera. We did, in our VC fund, we invested in Sei in the private round. We hold Sui in the hedge fund. We're evaluating things like Aptos, et cetera. But part of the reason that we invested in these kind of alt L1s, high performance or high throughput L1s, is that it creates a competitive market for high throughput, high performance L1s when you have competition. We like that. We like competition because this will also inform my view on Solana as to whether or not, hey, is this still the fastest horse, yes or no? Currently, it is. I mean, in the month of January, 75% of all DEX volume across every chain was Solana. Yeah. So, that it's really hard to argue against those data points to suggest that it's going to be losing share to an L2 on Ethereum or Sui or whatever. I do think there's a case to be made from a trading perspective for things like Sui and Aptos and Sei, because people are going to want the next Solana, right? Yeah. Well, what requires the next Solana is liquidity and developers. And those are two major components that Solana has that are winning with right now that could change to other L1s. So we want to have, don't think of it as like a hedge to Solana, but more like this is beta to Solana. If, for example, Aptos or Sei all of a sudden gets a bunch of liquidity bridged over and they've got some breakout application and a lot of people are starting to kind of bridge over to that chain, we want to have exposure to that because it still fits the broader mental model of these high throughput, high performance chains. So I do think there is a case to be made of actually owning some of those just as kind of beta to Solana.
Got it. So Sei, Sui, Aptos. Yep. So just before finishing off, Joe, I think it wouldn't be a crypto YouTube video without a few predictions. So I want to just fire away some rapid fire predictions for you. Feel free to opine on some of these. Obviously, there will be some price predictions. Let's start. Bitcoin price by the end of the year.
Oh, end of the year. So not at any point in the year. Oh man, that's tough.
Or it can top. You can tap up by saying or top out at this year or top out at this cycle.
So I would say for 2025, I think it's safe to assume that Bitcoin's trading over 150,000 at some point. I know that everybody else has these crazy price targets, but that just draws engagement to websites. I'm trying to be a little bit more realistic. You basically would have like a 50% move from kind of where we are today. That seems doable in something like Bitcoin, especially if you look at what's been happening with the price of gold for the past couple of months. A catch-up trade on a relative basis for Bitcoin feels like a 50% move is achievable. If we have a strategic Bitcoin reserve, a market structure bill, a stablecoin bill, sovereign wealth fund, this thing could be 500K. I mean, it's just, we simply don't know. And so the parabolic moves that could potentially come from Bitcoin with any one of those things coming to fruition is really hard to quantify. And that's why I think, like, on the one hand, a 50% move, irrespective of what happens with those other potential catalysts, feels reasonable. Whereas if any of those things happen, let alone a combination of this thing, I mean, it could be 10, 5, 3, 4, 5x higher than where we are right now.
Yeah. So contingent on those factors between 50% up to, 5 to 10x. Another one then, will Sol flip ETH by market cap? I'm sure that's going to get you.
I mean, obviously the answer is yes. The question is when. Like, the way that look, I've been on record saying this for a long time. Like, last year we owned exactly 0 ETH all year. I still don't see a reason to own it. And I'm talking from a trading perspective, right? So as a trader, I still think Bitcoin and Solana short ETH it's just, to me, just seems like a no-brainer trade. Part of the reason that I think Solana flips Ethereum is the metrics actually support it. Like I mentioned at the beginning of the year, first for the month of January, and yes, that was the Trump meme coin launch, et cetera, but like 75% of all trading volume was just on Solana. That is, a year ago, that would have been heresy to the Ethereum community. Now it's reality. What happens when that approaches 90%, right? Furthermore, I think the price of Solana is roughly 25 to 30% the value or market cap of ETH. Why is that the case if the ETH L1 is being cannibalized by, layer twos that aren't necessarily creating a deflationary environment for ETH's token, which is exactly what, ETH Maxis told us would happen? Well, you've basically outsourced execution of the L1 to these L2s, which takes away from the value of the underlying L1. And furthermore, those L2s have major user experience challenges, like, how do I select which network? Do I need to bridge something? Do I need the native token, et cetera, et cetera, et cetera? There are all of these kind of issues, and I've been talking about this for years, that are actually coming to fruition, where you're seeing a full-blown identity crisis in the Ethereum community, let alone the Ethereum Foundation. Those don't make me bullish ETH, even with the price where it is. And then finally, if you look at the ETH BTC chart, it has been in a downward channel for like 3 years. People have been calling the bottom in ETH BTC all the way down, and it just keeps making new lows. So until there's a structural change, whether it's at the foundation level or the technological level, the fundamentals just don't simply support ETH's price ascent. I mean, to be super clear, when the Ethereum when the ETH ETF, spot ETF, was launched in Q3 last year, Ethereum was down 24% that quarter. I mean, that just seems nonsensical. It's because there's not a reason to own it relative to something like Solana. So as the metrics of Solana continue to increase, as mindshare and consumers start to adopt more consumer-based applications that are built on Solana, I find it very difficult for ETH to not be flipped by Solana.
Got it. Okay. And then one more. What's the first altcoin, apart from Ethereum, of course, that that will get an ETF this year?
Solana.
Solana? You see, the thing is, the probabilities are not in the favor of Solana, though.
Yeah, I mean, look, so obviously I'm going to say Solana, but like, in terms of timing of which one will be first, I actually think, and this is kind of nuts, I think Litecoin has a chance of actually getting approved, and Doge, because Doge is clearly not a security, right?
Yeah.
So if it's not Solana, it's probably one of those two.
Cool, man. Cool. Yeah, because Litecoin has also been referred to as a commodity by both the SEC and the CFTC. So yeah,
that's right.
Yeah, crazy to think. Well, thanks a lot, Joe. This has been a really fascinating conversation. Where can people get more of your daily takes? Obviously, I'll link to your Twitter below. Is there any other place they can follow you, get your thoughts on the markets and everything?
Yeah, so I have a Telegram channel that I've been running for 6 years now. It's just kind of like my stream of consciousness, post charts and ideas and whatnot. It's t.me/joescrypt. which I can share with you as well. And then, Twitter or x.com/Joe McCann. And then, of course, you can go to asymmetric.financial to learn more about Asymmetric and our newsletters, all that kind of stuff.
Okay, we'll link that all below. Yeah, thanks again for coming on, Joe. It's been a great conversation. Hopefully do it again soon.
My pleasure. Great to be here.
Cheers, man.